I'm Austin Prey, senior reporter here at Payments. Joining me today is Sean Cunningham, the managing vice president of Capital One Trade Credit. Thanks for joining us today, Sean.
Thank you for having me, Austin.
And today we're here to discuss an exciting topic, how when change introduces risk, knowing accounts receivable quality is critical. And so diving right into that, when it comes to the accounts receivable landscape, enterprise firms are often faced with a tough task. They need to grow their business, but safely. How have you seen landscape transformations impact this reality?
Well, as always, B2B suppliers should be aware of where we are in the economic cycle and how that could impact the risk associated with their AR program. Right now, delinquencies generally have rebounded from the record lows during the pandemic and have returned to near, or in many cases, above 2019 levels. As a result, many B2B organizations across industries are struggling with delayed payments and disruptions to steady cash flow. No one can know for sure where this goes next, but suppliers need to stay on top of their AR and its trends to avoid outside risks to their business. Additionally, macro trends continue to shape the B2B landscape. The flight towards online purchasing continues, which creates both opportunities and risks to suppliers. Is it an opportunity in that suppliers can attract new customers they may not have been able to do before? But the flip side of that is, unlike with your legacy customers, there is increased risk with these new customers with which suppliers do not have a pre-existing relationship. Specifically, suppliers don't know which ones are the fraudsters or which ones are the very poor credit risks. The opportunity to grow is significant, but so is the risk to a supplier's business if not managed well.
In light of this kind of shifting landscape, are there any elements that have stayed the same?
Yeah, considering all these factors, what has stayed the same or actually become even more important is that suppliers have a modern and effective approach to managing credit and managing their AR program and just how they extend terms to their customers.
Totally. And then maybe building off that a little bit, what are some of the tools and best practices that a firm should leverage in order to better manage this risk of their AR program, safely and effectively?
Yeah, absolutely. Suppliers should have effective tools and defined processes across all steps of the AR lifecycle. This includes an effective and consistent credit evaluation process for new customers. This process needs to be able to evaluate both the risk of fraud and the risk of non-payment, and is at its best when using modern, sophisticated credit models to help make those decisions. Also, from a credit assessment perspective, evaluating a new customer should not be the last time a supplier looks at a customer's creditworthiness. In today's fast-moving and changing world, a customer's financial stability and ability to pay can change significantly over time. Accordingly, suppliers should routinely update their credit assessments on all of their customers to which they are extending payment terms to determine if there are any customers to which they should reduce or remove their credit exposure altogether. And it's not only about making solid credit decisions up front, it is also about making sure suppliers get paid and are avoiding throwing good money after bad. This means that suppliers should have robust and consistent collections processes to make sure they get paid. This includes early stage electronic reminders, utilizing outbound calls and credit holds when an account reaches mid-stage delinquency, and defined assertive recovery methods for late stage delinquencies. All of these practices together are necessary to protect suppliers from business crippling credit losses in today's fast-moving B2B environment.
And from a customer experience perspective, what does the best-in-class experience look like? And maybe what are some of the things that can support that?
Yeah, from a customer experience, a best-in-class experience usually results from enabling technology and automation end-to-end through the accounts receivable lifecycle. This means having the ability for customers to apply online, get approved in real time, and to be able to purchase immediately. Suppliers also need to make sure they are delivering the customer billing via the channel that the customer desires, whether that's online, over email, or even if they want through the mail, and with the information that the customer requires to unlock timely payment. This could be a PO number or the SKU level data. So really getting that information that is needed to make sure that you get timely payment. Best-in-class customer experience also means having 24/7 online servicing capabilities where customers can access their invoices, manage their preferences, and pay online. And lastly, suppliers should also be providing multiple payment options to their customers and have sophisticated algorithms to automate to ensure that those payments are applied quickly and correctly. Suppliers should look to implement all of these tech-driven capabilities to ensure a seamless end-to-end experience, or they risk losing their customers to competitors that do.
And so, maybe touching on that, those firms that haven't quite made that next jump, so for organizations that are still relying on manual processes, that are still kind of, trying to build their businesses off of legacy systems, are they able to achieve, the goals of both managing risk safely while providing a desired customer experience?
Yeah, it's possible, but it's definitely much harder. In general, business customers are no longer accepting of the clunky manual processes long associated with B2B accounts receivables. They are more and more expecting the seamless technology-infused experience that has become the norm for consumer credit processes, for example.
Totally. And, kind of considering and taking a look at everything we've just talked about, what are some of the best go-forward options for firms who are looking to ensure that they are not only managing the risk of their AR program safely, but also doing so effectively?
Right. Yeah, suppliers should start by evaluating their AR philosophy and risk tolerance, including how much risk they are willing and able to take in order to support sales and growth. Certain industries where a supplier may not be having a lot of new customers, and it's kind of the same customers that they've had for a long period of time, kind of the old methods may work a little bit better. But particularly in a growth mode or having new customers or moving online, it is the more important to have the right tools and solutions in place. One solution for suppliers is AR automation software. There are many good solutions out there that provide tools for suppliers to more effectively manage components of their AR program. Another option is a full service solution such as Capital One Trade Credit. We provide our clients with customized accounts receivables programs that provide their customers with a technology-driven experience while also removing or reducing the supplier's burden of running their own in-house program. We additionally provide protection from the credit risk of the non-payment risk or the fraud risk, and improve suppliers' cash flow through advanced funding.
Awesome. And, looking ahead, I know, crystal balls don't exist, but if you had one in front of you, what were some of the future innovations that you might see, driving tomorrow's most successful accounts receivable programs?
Yeah, definitely. No one knows exactly what the future will hold, but I think there are several innovations out there that I think will grow in importance as we move forward. The first is pre-screening. This means enabling the capability to evaluate your customers or potential customers for an AR account before they even apply. This allows suppliers to determine who they should and should not target for a terms account and make proactive offers, which could be larger credit lines or longer terms, and to make those offers with customers for which they most want to deepen their relationship and hopefully increase their sales with. Another trend which is only growing in importance is the use of new and additional real-time data sources in performing credit evaluations. It is no longer enough to just check a credit bureau when evaluating a new customer's credit. New third-party data sources, with an example being a real-time integration with an applicant's banking history, enables suppliers to both reduce risk and identify opportunities to increase sales by extending additional credit or longer terms. Now, in summary, both the AR landscape and the tools available to manage this landscape are changing. In order to grow safely in this environment, suppliers need to develop their strategy and investment plan that will result in both a best-in-class customer experience and the ability to effectively manage that credit and repayment risk.
Yeah, I think that's exactly right. And that's a great note to end on. Thank you so much for your time today, Sean.
Thank you, Austin. I appreciate it.